if you're part of my program, you know that with the end of day signals, we always look for follow through. Well, we didn't get that follow through. On the subsequent day, we didn't get the follow through. We didn't get the follow through. We didn't get the follow through. And then our signal was reversed yesterday or 2 days ago, only to give us a signal again yesterday. So we were doing the same trade that we would have done last week. We've been looking for follow through today. It hasn't materialized yet, but again, we still have all afternoon and the last hour of trading, which we call professional hour. As soon as we get follow through, I mean, that's how it works with end of day trading, right? You get a signal in the evening after the market's closed. You do some conditional trading. I usually set it up in that evening for the next trading day. Basically, conditional trading is you letting your trading platform evaluate one or two things that makes sure that the signal you saw the night before is following through, right? And so then you come back the next evening and you see if any of those conditional trades popped. And if they didn't pop, you ask yourself, well, should I set it up again for tomorrow or should I nix it? And so that's why we use these end of day signals. If we get an end of day signal that says nix it, we stop setting it up for each day. Until we get that, we don't stop setting it up. We set it up each evening and see if it pops the next day. So yesterday we got a new signal that said start setting it up again. Today we've got it set up. So far it hasn't popped for us. So that's just it. You spend a couple of minutes in the evening and then you let the trading happen during the day while you go do whatever you do best. And that's what I do.
All right, Citigroup still in play. Wait and hold until we get that follow through, which rolls us into a similar name, similar industry for this week's pick of the week, and that is Bank of America, ticker symbol BAC. Are you seeing a similar setup?
Absolutely. So, this banking sector, by the way, for premium sellers has been profiting for about the last 4 months. And so, it's kind of been a move because over the summer and at the end of, this past spring, late spring, it was a lot of tried and true retailers like Bath and Body Works and Bed Bath and Beyond. Well, it's kind of changed this autumn. It's now more like banking plays. And so Bank of America is right in the same thing as Citigroup. What I like about Bank of America, different than Citigroup, is the underlying symbol's a lot cheaper. So with Citigroup last week, we actually had to not only think about our usual premium trade, but that could have priced a few investors, unless you have a bigger portfolio, out because it got a little bit too expensive. So we were talking also about bear vertical spreads, which have their place. The problem with vertical spreads is that risk is infinite. Risk is the whole invested amount. So you can't size them very big despite being able to. I should replace my language, Sip. You can do whatever you want, but if you want it to be smart, you don't size these things bigger than the amount that you're willing to lose, because a vertical spread, I've seen so many people lose, marriages, and you lose houses to foreclosure because of vertical spreads. So you have to be very careful. It's not my favorite strategy, unless you have no alternative, and then you have to play by the rules of risk management. But the scoop here with Bank of America is lower priced. The barriers to entry to do it the way we like to do it, where we leg into premium selling trades, collar those positions, totally there. So we're just waiting, and it looks like I'm watching just as I've been like on my like soapbox here, being the goat of disciplined options trading, right? I've watched, and who knows, we may get some good follow through this afternoon, and we may want to go ahead and short some Bank of America. If you don't want to short Bank of America, either because shorting isn't your thing or you don't have a margin account, you would need to have a margin account to short. I picked out a substitute option. Can I show this options lookup tool, Sip?
That hey, it's making progress every week.
Well, and that's the reason why I wanna show it. My developer and I talked, yesterday morning at 6 AM, and he's like, "Oh, by the way, check out these latest updates on the options lookup tool. I want you to use this for a couple weeks before we give it to the masses because I've added a lot of functionality. Like, check this out. He put in a screener for liquidity. Open interest and volume on options used to be a really reliable way to get an idea of how liquid it is. But now, with a whole bunch of dark money, with a lot of options trading happening that's not as visible, open interest and volume haven't been as accurate for us to know if something's liquid. So we go back to the gold standard, which is look at the bid ask spread. And I like to normalize that, come up with a fraction so I can compare apples to orange. And he put it into my freaking tool. So check this out. I can come over here. Let me look for, seeing if an option might be liquid. Uh, you know, you just look at this percentage where it says normal spread. If this number is under 10%, it's liquid. If it's over 10%, it's not liquid. All of a sudden, I don't have to do all these calculations on the back of a napkin or in my calculator. He put it as a little value here. I'm going to go back to him and say, hey, if I'm looking at liquidity, maybe I'll have a button up here that says look for liquidity. It'll highlight the ones that are liquid so that there's not even going to be a question. But the fact that he made it this simple for me so that I don't have to, interpret the data, but it'll just show up in like green lights. These are the ones to use. I'm pretty stoked. Anyway, the option that I would use as a substitute instead of shorting it would be this one right here. So check this out. He also made it so that I could look very quickly at what components of the options are intrinsic and extrinsic value. Good option substitutes have extrinsic value at around 5% or less. So this one, it's just on the margin of being a good trading at parity option. And then here's that liquidity number. I'm just going to have him, whenever these numbers are in range, make the whole thing green so you can just look very quickly and know exactly which option to choose. I'm recommending the Bank of America July 2026 $65 put if you don't want to short the stock. But again, wait for the signal, and if in doubt, paper trade. I'll be in there doing what I'm doing.